Welcome back in, everybody. So we are seeing that volatility that I talked about today. But before we get into today's video, please, if you are not subscribed to the channel, please consider subscribing. 66% of you are not subscribed to the channel and obviously are watching and finding this content somewhat valuable. It costs you nothing to smash the thumbs up and show some appreciation. And it means the world to me because this is what keeps me coming back. If you've noticed, I'm not posting as many videos because people are not subscribing, people are not liking the content, and it takes a lot of time and effort to really build these theses. I'm not going to be 100% accurate, but I would say overall, I've been very, very accurate. So a few dynamics are taking place today. Obviously, we see the S&P 500 down over 1%, the Dow down 0.5%, and the NASDAQ pushing 2% down. We're watching gold prices dive. Even though rates are starting to go up, we're watching the Russell actually hold somewhat steady here, which is a little ironic. I wouldn't put much thought into that. I don't think you want to be too exposed to the Russell going into the next few weeks. And we've really talked about building cash for these opportunities. Now, I just think this is the beginning of a possible correction. We've earmarked the end of October to the beginning of December. Literally today is the last day of October. We couldn't get it any more accurate than we have. Now we're watching pretty big moves here in a company like Estee Lauder, down 20%. This was over a $150 stock at one point in time, down over 50%. Now, two stocks I've really pounded the table on. Number one is definitely going to be Bristol Myers Squibb, up 5%. This was paying over a 6% dividend if you bought it in that $39, $40 range. They're seeing strong demand in their blood thinner meds, and they are upping 2024 guidance. Another company that upped 2024 guidance was Pfizer. The reaction on Pfizer was a little surprising to me. I believe if this thing breaks below $28 a share, you have a really nice dividend yield, a really nice stock that is showing some earnings resilience here. Now, after blowing out earnings, the big knock on Pfizer was a lot of their money is still coming from COVID-related items. And what I have to say to that is the money still spends the same, meaning they're still getting good earnings, regardless if the street likes COVID or not, is really irrelevant to me. They're still selling a crap ton of product, and they have a lot of stage 2 and stage 3 products in the pipeline ready to come out. So essentially for me, when I look at Pfizer, you're buying time with these COVID products in order to meet expectations on your phase 2 and phase 3 items that could be coming to fruition. Now, of course, these things could not come to fruition. Now, overall, I would say the stock's holding up fairly well in a high volatile market right now. And healthcare has been one of those sectors that we've talked a lot about. This is an area where I think we're heading into late cycle. We could see some volatility. And these are some kind of areas where on big pullbacks, you might want to hide in because they're trading at pretty low valuations, paying high dividends, and will have earnings resilience and earnings predictability. The problem with companies like Estee Lauder and many other companies that are really reliant on consumer discretion is, do they have exposure to China? Because if one of the presidents get in, we could see a lot of problems with those types of companies. Is the consumer going to remain resilient? These are really hard questions to answer, and to be quite honest with you, I don't think many people can answer these questions. And so healthcare was one of those areas where I felt like you could kind of hide out in, build some cash, collect a dividend, lower the volatility in your portfolio. And so there was multiple reasons why I actually thought certain pockets of healthcare made a lot of sense. Now, one company I did say that could surprise was Etsy. Etsy sold off drastically. The one difference that Etsy has to a lot of other retailers here is the fact that they can be connected to the creator and you're really able to buy one-of-a-kind type products. And so I think this is a niche area. I think it makes a lot of sense that it could perform well. And I thought it was undervalued when it got into the mid 40s. We can show that they're showing some earnings resilience here, which is now forcing the stock to be a nice outperformer on a red tape day. And so these are names that I've been bringing to the table that, haven't been getting a lot of views on the videos, but these are contrarian names that you don't get a lot of coverage in the media, which means when you're not getting a lot of coverage in the media, that means that the price is probably not at perfection. You might be able to find some opportunities. The only way you're going to really get an outsized gain is if these companies beat on earnings, and that's very hard to do when we're seeing a slowing consumer, and we could be seeing a slowing economy. So as we head into what I believe is going to be a pretty volatile week with the presidential election, and the initial knee-jerk reaction I think could be a buying opportunity. We could see 2-3% moves in any direction at this point in time, and personally I'd rather have an over And personally, I'd rather be a little bit overweight cash to buy any sort of disconnects that could take place. And that's why I've been saying, ladies and gentlemen, to possibly start building cash here. We're starting to see higher lows and higher highs peaking up in the VIX here. And I do think we're going to break out on the VIX as we head into the presidential election, which could mean that the stock market could see a nice dip here. Where am I looking to start averaging in on the stock market would be if we get above $28, $29 on the VIX. As you guys can see here, ideally, if we break above 31, I think this is a great buying opportunity, as this could be peak pessimism and an opportunity to really average into some positions you may have been looking at. So as we have positive configuration in the VIX is making a nice move up, and it looks like the move and the path of least resistance to me looks like the VIX move is going to be higher. So at this point in time, I don't see anything that you need to rush to. I think this could be a multi-week, multi-day type period. And as we stated, this is what we've been talking about. Over the last few weeks, I've tried to create videos without scaring people, saying that the opportunity is going to be coming to start building some cash and averaging into some unique positions. We're basically up against this white trend line that I have drawn here. We're pointing down. Now the configuration is still positive in the S&P 500. Once again, this is probably not anything I would short, but we're heading into a high risk period, which I've talked about numerous times. You guys are probably tired of hearing me, but on a day like today, you're probably like, wow, this is starting to make sense. So what I want to show everybody is as we head into end of October, mid-November, and beginning of December, this is where I thought the high risk period is going to come. And I was trying to warn people a little bit early here. Now, I definitely was maybe a week or two early, but I'd always rather be a little bit early than late when things like when volatility starts ticking up. And so multiple signals was the VIX, valuation, money flow, and the internal technicals are starting to roll over. And so all these things led me to believe that we're probably getting close to a higher volatile period. Now we throw the presidential election on, and it just made sense to me that, you know, markets are trading at pretty extended valuations. There's nothing wrong with sitting back, building cash, holding on to your positions, and waiting for a disconnect to possibly buy some pretty good opportunities on big dips. I think we all can agree that this is not a cheap market. It's not on sale. But when it goes on sale, is this a market you may want to pick up? Now, the chart you have in front of you is the S&P 500 companies trading above their 200-day moving average. If I'm looking to buy, I want extreme readings on the downside. So not only do I want the VIX spiking up here, but I'd like to see S&P 500 companies trading well below 40% of the 200-day moving average. That would be a pretty substantial correction that I think would take place. That would give me the signal that this could be a good buying opportunity. And where we get really extreme readings is when we're talking about the low teens area. There's only been a couple of times that you've had those opportunities. I think we would definitely need some sort of recessionary signals or possibly be in a recession to kind of see those types of sell-offs. But just to kind of give you guys an understanding, and as of late, it's been a fairly narrow breadth, right? We know that most of the companies leading the way, it's been about a handful of companies really carrying the market, and it's mainly been technology. And so we're trying to look at some indicators to let us know, when does this move get exhausted, or when does this move get extreme, to where we can kind of start looking at possibly taking on some risk. Last thing I want to finish up here is going to be Intel reporting earnings. This is a company that is getting a lot of government assistance, a lot of government money, really trying to find an identity, really trying to do a lot of different things at once. And so this is one that's kind of piquing my interest on what the earnings expectation is going to be. This will probably be one we kind of break down together. So if you want us to kind of do a live stream and break this down together, make sure you like and subscribe, hit that bell, because I don't know when I'm gonna go live, but I will try to do so over the weekend, possibly Sunday night or Monday evening. One of those days I'm most likely gonna go live. We'll break down the stock together using our DCF models and talk about earnings season as a whole, and make sure you try to make that. I don't know when it's going to be. As I stated, it could be Sunday night or Monday night, and that'll allow for some Q&A as well. So if anybody has any questions about earnings, we could possibly plug in a stock together and run the analysis all together. As always, guys, really appreciate your time. Consider subscribing, smash that thumbs up, and we'll see you all in the next one.